We have a little bit of optimism returning in certain parts of the crypto market as many believe that you could be creating a major low, a local low at least. So in today's show, we'll discuss whether this is possible. Of course, we'll also address the Mantra rug pull over there. You can see Mantra down, went down as far as 90%, of course, putting a little bit of a bounce over there. We'll talk about that as well in today's show. Absolutely massive. We'll talk about the stock market. There's something major occurring right now within these stock markets, which I think everyone needs to pay attention to. Smash the like button, hit the bell notification, and subscribe to the channel. Let's get straight into the show content. So what exactly has happened over here? Essentially the team have come out and said that it's not really got anything to do with them. There was a forced liquidation that took place on a centralized exchange, wiping out one of the mass whales and, of course, dropping price hugely. Look at that. Look at that chart over there. We bring this chart up over here. Mantra was, of course, one of the top real world assets, one of our biggest plays. We established our positions really low before this whole move up over here. And we actually exited the full position once we got the break of structure. Remember, we spoke about this. We spoke about this on both the shows as well as in the private Discord channel where I said that, this is, of course, people ask me, do you think this is manipulation? Of course, it was manipulation. And I said, have fun while the ride lasts towards the upside, manipulated towards the upside. Of course, there was going to be a point in time where that came down. I definitely didn't expect it would happen in one foul swoop, in one single candle like that. And that's exactly what we saw. Absolutely unreal. But the warning signs were essentially over here. As soon as you broke structure, we did outline that over here. We said as soon as you couldn't get back above, this was the equivalent of Bitcoin losing that key $90,000 level over here. You wouldn't want to be holding any positions. Grinds into that, and the bearish structure was already persisting. So my expectation was actually that you would have seen something like this back down to around the 440, probably a big push up over here, failure to get above the breakdown level, and then slowly it would have bled down towards ultimately these levels. I definitely did not expect in one foul swoop. So I hope you guys are okay out there. I hope that nobody was caught essentially holding this position over here. Would I be a buyer of it now? Maybe that's a question some of you are asking. Definitely not. Personally, I would not be a buyer when you see something like this. It kind of reminds me of Luna, right? Those things typically don't V-shape or recover. Where is that liquidity or money going to be coming from? So that is the story of Mantra, right? Now we need to talk about other things that are breaking within the market, because we do see gold continuing to push up towards new all-time highs. It's been absolutely crazy, right? Absolutely crazy markets in general. Gold playing out a massive high time frame monthly cup and handle formation all the way to the upside and superseding that $2,900 target that we set from a long time ago. And it's unbelievable to think that gold has outperformed Bitcoin, right? 66% up over there. Will Bitcoin play catch up and follow suit? Well, only time will tell, right? But we are seeing major things occur within the market because gold creating all-time highs while the dollar continues to break down. You've officially got the dollar sweeping these range lows over here. Now, usually when you see this type of an environment, risk on assets would run. And we actually identified this all the way at the top over here, where we were anticipating already in January and January, that there was going to be a possible deviation of this level. We said that if stocks do not rally alongside the breakdown of the DXY chart over here, that could be money leaving the US, right? And currently that's been the case, right? So now what we need to be careful of over here is that more damage is not caused in the risk on assets if you do get a deviation back into the trend over there, and then you start to run towards the upside. So I think what's the most likely outcome over here on the DXY is you'll probably consolidate underneath these prior support levels over here. And then it might take a little bit of time to eventually continue to roll over towards this macro trend line, which you can see has held the broader trend, at least for the dollar index, right? Over the last couple of decades, this has been the macro support over there. So I think eventually you're going to work your way back down towards those key levels. Where the Bitcoin catches a bid during that drop is, of course, debatable, right? And we'll look at that as well in today's show. Why? Well, we do have the death cross, which is now going to be taking place not on Bitcoin, but on the stock market. That is on the daily time frame between the 50 and the 200 moving average. You can see this has been key support over here previously key support, eventually it lost that level, flipped into resistance, and now the death cross is occurring right at that resistance level, which basically means that for the DXY, or for, excuse me, the S&P 500, that being the stock market, to regain into a position of strength and to negate this entire move towards the downside, basically marking it null and void and calling it nothing but a shakeout, what you would need to see is you need to see the stock market reclaiming 5,800. That's a level to reclaim. You want it to get back above there. You want it to hold above there. What your expectation should be is similar to most asset classes. When you do get these death crosses, they act like a magnet, which means that price can pull into that. It's the same as true with the other side when you're getting a golden cross, right? If price overextends away from the moving averages way above, and then you get prices or the cross moving towards the upside, you could see price pull back into that key level, right? So now the inverse of that is the death cross. Price could pull back into this, but be aware of what they call the kiss of death, right? The kiss of death is where you pull back into that death cross, you just touch it or kiss it, and then ultimately move back in the opposite direction, meaning continuing the downtrend. So that's what Bitcoin has as well, the presence of Bitcoin. It is a death cross, which is currently taking place. You can see price finding resistance exactly at those key levels with the parallel channel towards the downside, with the mid-range resistance at $86,000, and the equivalent of the stock market getting above 5,800 means Bitcoin needs to get above this $88,000 region to start to be positioned in a place of strength, right? Now, if we do get the kiss of death, well, what has happened in the past for the stock market? Well, I actually took the liberty of at least testing out Grok. We'll see how accurate it is. But according to Grok over here, these have been the prior times that you've put in those death crosses, right? Now, your max drawdown that you'd experience would be on the right-hand side over here, 78.8%, 29%, 53, 19, 12, 19.8, 33.9, and 25%. The good news for those of you that do have a high time frame perspective is, of course, buying anywhere around these levels probably means 12 months from now, you will be up on your trade. As you can see over here, most of the time you've been up on your trade. The only times that you weren't was in the Great Depression, the dot-com bubble, and the great financial crisis in 2008, which led to negative 60%, negative 20%, and negative 45% 12 months following that death cross. Now, if that does occur, of course, what that means is we would be going into a similar episode in some sort of a major recession or depression, right? However, if this is just going to be a blip in the water, like COVID, Fed tightening, high inflation, tariff wars, etc., then you would expect that it is probably going to be met with higher prices in the weeks and months to come. So pay attention to that area. I guess that's the message over here. What you want to do is probably position yourself more into an environment of safety. Why? Well, we just had someone come out yesterday, Stanley Druckenmiller, of course, very, very famous stock trader in kind of the Hall of Fame with Warren Buffett, basically outlining his major cause for concerns with the current market conditions and how you could be seeing a shift of the entire monetary system, right? Entire monetary system completely shifting, suggesting at least that he studied the past and he's seen the story before, right? Which means for you, I think that, longing over here is very, very, very risky. Although you could put in about a 5% move to hit that death cross where you'd get the kiss of death, it's really probably better to just wait for the reclaim of 5,800 at this point, meaning your opportunity cost is going to be around 7 or 8%. And then you can wait for confirmation of holding above that level. And then you can say, well, the storm has passed and now it's smooth sailing once again, right? Think of that analogy, right? Do you really want to go through a storm? Do you want to go through a storm? Probably not. If you're a sailor out at sea, you'd probably want to be on smooth waters as far as what you can help it, right? So with that being said, things to pay attention to this week. The biggest thing is going to be Jerome Powell is going to be speaking, depending on where you are in the world. This is 9:30 my time, but that's happening on Wednesday. Mark that off on your calendar. I would expect that this is probably going to lead to some sort of volatility coming into the market. And we're right on the cusp of this, at least, we're in this pivot level right now, right on the cusp of bulls potentially taking over, but bears also continuing the trend. So they're fighting tooth and nail. We'll have to see who does take control. I'd imagine that Wednesday will probably be the deciding factor for where the bulls do reclaim $88,000 and ultimately do take back control. But again, the stance that I'm taking is I'd probably wait to be a little bit more cautious, wait for some key levels to be retaken before I do get too excited, because again, in the words of Stanley Druckenmiller, you are playing with fire in these current market conditions. So we've spoken about this. I covered this actually on Saturday's show. If you haven't gone and watched this, I streamed on Saturday where I spoke about the picture that probably most people do not want to see, which is your Heikin-Nashi candles have flipped bearish, of course, on a high time frame, weekly, 2 weekly, 3 week scale, and on the monthly as well. And you're about to get a death cross as well, using your MACDs, using those moving averages on a monthly scale. Whenever you've got the monthly scale crossing towards the downside, it has marked the end of the bull market. At that point, you're already firmly into the bear market, which is why we've been focusing on things like the weekly, the 2 week, and now the 3 week, which is officially already crossed, right? You can see over there that 3 week candle has crossed. We have 6 days left to go before we do actually close the next candle. So if this week closes bearish again, well, you would just expect that this is going to start to gather more momentum towards the downside. And this is why I would definitely side with caution. And if I were going to be an aggressive buyer who was going to step in, I'd really wait for those key horizontals to come into play, right? I'd rather be buying into that strong horizontal level over there between that 66 and about 73,000. It just depends on the momentum and how fast price comes into that key zone, where then you play the bounce, right? In terms of Elliott wave, you've had the 1, the 2, the 3, the 4, and the 5 wave counts, right? You've met that criteria theoretically. Unfortunately, you have to wait for a lot lower to confirm that wave 5 is in fact over, because what could happen is, of course, you could find support over here and then take out those highs, at which point wave 4 to 5 is still in play. That is a possibility. But you have to play a defensive game over here, because testing that key supporter, moving up into the $95,000 to $100,000 region, if the top is in fact in, would then your expectation would be met with a lower high, right? A lower high like that, and then you're going to lead into the BC correction, which would take you through the rest of the move, where you're going to find supported levels that you probably don't want to talk about today. Nevertheless, that doesn't mean that we don't trade the market both ways. We are still long in certain positions, preemptively waiting for the bounce. And you can see our bots are finally paying out over here, right? If we just quickly move that over there, you can see our bots are finally paying out over here. They are showing profits. We've got the SUI, the SOL, the ETH, and then we have the hedge position that's over here on Pinex. Remember, the way that these work is when you look at these key areas, essentially what we did is we bought into the green zone over here, and then as this moves back into the red zone, it's now initiating the sells. So if Bitcoin does rally up to that $95,000 level, which is entirely possible on a relief rally, well, this is going to probably fulfill the majority of our sells, right? So we can have a look over there. That's the SUI one. There you can see all the buys over there. SUI now running up over here. And now we're starting to sell that SUI position into the red zone over there. So very intelligent bots. It really works nicely. If any of you do want that, or you want to copy it, they are here for you underneath. Literally all you have to do is, for example, click on that. Click on SUI over there. And then you can pretty much just copy the bot. It's all linked below. So looking good over there. Now, let's talk about Bitcoin, right? Bitcoin has not fully retraced the entire Trump pump. The Trump pump started over here around that $68,000 region, as we started to see on Polymarkets that he was most likely going to win the election. It started to get priced in towards the upside on Inauguration Day, which was actually the exact top over there at that $109,000 region. Price obviously started to come down. And ever since then, it's been in a downtrend. Remember, the trend is your friend till the end of that trend. So although you can put in relief rallies, the high time frame trends have not yet shifted. We are still in a downtrend on the daily and above, which means you don't want to necessarily counter the trend unless you're in a very short-term trade and you've planned for that. But in terms of long-term swing trades, this remains a downtrend. And we spoke about the key level to reclaim was $89,000. Now, if price does reject from here over the course of this week, and you see, another move towards the downside, then we would reduce our validation level to get bullish again, right? So to get bullish again, we've said we need to see price get above that Wednesday high, which was $88,000. And although over the course of the weekend, there was a lot of buying pressure that came in and a lot of excitement, the reality is we haven't had any closing candles above those key levels, and the volume continues to reject price. So if we do see follow through towards the downside this week, and most of those weekend gains are given up over the course of today, well, all you have to do is reduce that validation level to there. Now that becomes the next lower high, which means that's the next level that we need to reclaim to break structure on the daily and start to get bullish again. I'm going to leave it as it is because we don't have a confirmed local top here at all, right? In fact, there's still actually the opportunity for bulls to take control, and I'll show you why, right? I'll show you why in just a minute. So I think some of the buying pressure may have been Michael Saylor over the course of the weekend. You know, he came out with his tweet and he said, you know, no tariffs. This was yesterday, no tariffs on the orange dots. Oftentimes when he talks about these orange dots, soon after it's announced that he put in some big buys. So we will keep track of this. You know, he has, of course, raised his average very, very, very significantly. You have his average buy price right around that key horizontal support. So again, going back to this chart over here, where is it? Let's go over here. This one over here. There we go. Right around that key horizontal support at that $68,000 is Michael Saylor's average buy price. So I'd imagine he'd be sweating if we do start to come into that key level. So let's see how much of his, you know, available capital he pulled the trigger on for this next buy over here. We're looking also at the USDT dominance, which does continue to remain in an uptrend, although it does look to me like a weakening uptrend, which is why I would suggest that there's always a possibility that you start to see a breakdown over here. But remember, resistance is resistance and should be sold, and support is support and should be bought. And according to this chart, you are at major support over here. What I don't like is, or at least in terms of if you're bearish, right, is that you are consolidating below those lows that led to this big move up over here, right? So if you're bearish, there's a good chance that this is going to break down. If you're bullish, that's a good thing, right? You want to see this grind into this level over here, because a breakdown in the USDT dominance could eventually end this parallel channel that's been governed all the way towards the upside. But again, I wouldn't front run these types of things. I really think that it's probably better and safer for you, given the current market conditions, to literally just wait for the proper breakdown. Wait for the breakdown over here, set in the lower high. That lower high is going to be your sweet spot where you'd be able to allocate into the market, at which point you have confirmation that things are beginning to shift, right? So a lot of things to look at over there. I'll show you a couple of other reasons that you could see a spike towards the upside, one of which is the majority of the liquidity on the order books is being completely wiped. So if you look over here, you can see at least on the last 24-hour time period, and if you look back over the last day or so, most of the liquidity is on the upside over there at 85,600. Now, remember, whenever you target these liquidity zones, you need to see, is it just a wick that's left behind, or is price actually maintaining and holding at that level? Well, if price does break above this level and maintain, I will remind you that at that point, you've probably broken this downsloping trend line, which then shows a shift in trend, which simultaneously means that you've also probably broken this upsloping trend line in the USDT dominance, which also means a change in direction over here. And then the bottom may actually be in, right? So is the crypto low in? And what is the confirmation signal as per the thumbnail? Well, it's a little bit challenging to say, but there is some opportunities for bulls to take place. And I think that we need a bit more information to unfold. I think that the ball is in the bulls' court right now, where they have the opportunity to take the reins and get prices higher. So I would, again, wait for those confirmations, right? Wait to see the USDT dominance actually breaking and closing below this trend line. Wait for the Bitcoin USD chart to also break and start to close some confirmation candles above these key levels, and most notably take out that $89,000 region, 88,000. So you need to get to about 89, right? Which means it would look something like this. How would this play out practically, right? You would probably see something like this. You literally could squeeze very aggressively all the way into $95,000, which still remains your underside resistance. Then you'd probably see a pullback from there, which would then set in a high low, possibly still around those $80,000 levels. Keep in mind, this high low may only come about a month from now. So there will be a lot of FOMO that will be stepping in at this key level. And that would therefore be the safe entry. I'm going to mark it with a big X. That would be the safe entry when you get the pullback into this region, set in a major high low. Maybe at that point, you know, you got some sort of a left shoulder, you have a head, and then you put in some sort of a right shoulder, inverse head and shoulder, and then you can start to target high prices, right? So allow price action to slowly but surely unfold if you do want to position with size. Again, I'm talking to different people. Remember, we are long in certain positions, but this is a different strategy. It all depends on your strategy and how aggressive you want to be. For me personally, I'm not willing to be too aggressive yet, given the broader systemic risks that are currently within the crypto markets right now. And given this chart over here, right, I'm not willing to take on too much risk. Where I take on mass risk is usually at the bottom of the market cycles, like here, right? That's where I'm willing to go with max risk. When we start to get, even if the bull run does continue, I'm sure everyone here can agree that you're at least 3/4 of the way through this bull run, if not fully through the bull run. When I'm 3/4 of the way through the bull run, I don't want to take on too much risk, right? That's as simple as it is. Just to make it very simple for anyone that's new here to understand the basics, right? You can see the daily 7-day exchange volume is still rising towards the upside. It will have the opportunity to break that downtrend. The key level to get above is $75 billion, right? And this is what I'm talking about when I suggest and when I say that the bulls do have a chance here to shift the tide, right? The tide is still going out, right? It hasn't come in yet. It's still going out. The bears are very much still in control, but eventually the tide can't go out any further and it has to shift and eventually come back in. And we could be nearing that point. Not only because of that, but also because the RSI has broken the downsloping trend line. We're starting to get multiple daily candle closes above, right? So ever since Friday, we've had Friday, Saturday, and Sunday, 3 closing candles above that downsloping trend line. And we officially have also 3 candle closes above the 50% level, which is probably something of more significance to me personally. So what do you do over here? Well, since there can be a lot of manipulation over the course of the weekend, it is probably better to just wait for a few more days and see what happens leading into the FOMC, or not the FOMC, but Jerome Powell's speech coming on Wednesday, right? And that will tell you whether this is a trap, because there is always a possibility that you do see a trap over here. Has this broken structure? Well, theoretically, it has, right? The RSI has officially created a high marginally, but it has created a high over there. The other thing that suggests that the bulls may attempt to take control over here is none other than our very, very successful bull moon, which is just printed, right? We have the bull moon. We know what it does, the bull moon. Therefore, you're looking for the play towards the upside over here. If you're a short-term trader leading into the next bear moon, you want to see a high-low form, which, as I said, could occur in May. And then you kind of have that inverse head and shoulders setup over there, right? That's the safe play. That's the safe play. The aggressive play is to pretty much look for longs now. And to do that, you need to look on some of the low time frames, which we can talk about. We'll get to that, right? So ultimately, what you have over here is this, right? I've marked out very, very, very precisely using the magnet and extending this to the right-hand side, a resistance level, right? This is still resistance. A lot of people, this is going with the most conservative, right? Some people may have shown that this is already broken, but I always like to side with the absolute most conservative approach. And the most conservative approach is wick to wick to wick. And then you can see those ones just narrowly missed, and it's extended perfectly towards the right side. And look at that. You wicked exactly into that over the course of the weekend, which may have been led by Michael Saylor's buys, right? So this is the first sign of strength. If you even just get a couple of candles closing above this key level over here, and then your next target is going to be that $88,000 and then possibly beyond there. So the good news is you're above the 200 EMA and the 50 EMA on the 4-hour time frame. Not only that, but if you focus on the pink box over here, this was the original breakdown level, right? So this was major resistance. Price came into it, Tesla's resistance, it came down. What you then saw is we marked this off over the course. I think this was on, we showed this when price was coming back. It was on Thursday, right? On Wednesday or Thursday, we marked out the big inefficiency and we said, watch that price doesn't fully engulf this inefficiency, right? And if you looked at the total of this move, there it is, right? And we quickly mark out the 50% level. There you go. You can see price started to hold that 50% level, right? So you put in on the low time frame some high highs and high lows. Now extending this box towards the right-hand side, which was resistance, you flipped it into support. You again tested it as support. So what does this mean? If you're a very aggressive trader, there will be traders that are looking for long trades pretty much right over here. You know, this is going to be the setup, right? If you believe that prices are going to run higher towards about $90,000, let's see if the risk to reward would make sense within this region, right? So, you know, that would have to be your very, very, very hard stop, right? Towards 90,000, you're then looking at about a 1.3 to 1 risk to reward ratio. As a RR trade, a risk to reward, you know, it doesn't really make sense for me. Personally, I wouldn't take that. I would rather go very aggressively, looking on the super low timeframes like this. You know, if I were to be taking longs, I'd rather be looking at something like this. Gain an entry somewhere around here, stops below these lows, and rather just take the loss if it comes into there. This way you get a bit more of a favorable risk to reward ratio, so you can watch as price is unfolding right now, and then the biases, you know, that ultimately this is going to trade up at least to sweep those highs. Even if it's bearish in the high time frame, I still think you might take that liquidity, right? You might see some sort of a scam wick towards the upside. Again, I want to differentiate. There's a difference between swing traders and now low time frame traders who want to take this trade, right? Low time frame traders, you can see this is a small move. It's about a 5% move. You're just looking for something like this, right? You're looking to position right around here. You know, maybe you can get some lower candles that start to form a low, but anyway, around here, you're trying to watch price to see if you can get the move up to there. I'm not sure I'm going to play that game again, guys, because, you know, I'm dealing with a bit more size. I just don't really feel like it. But if I were a low time frame trader looking for quick opportunities, that's probably something that I can look for. And then you can make the argument that as this trade starts to play out towards the upside over here, you could even theoretically start to flip in the opposite direction and then just eliminate your risk by moving your stops to break even. And therefore, you might have both a short trade with stops above there and a long trade position. So when the next big move happens, which is probably this week, one way or another, you're going to get your trade in play, right? So these are just trade ideas. It's not gospel. It's not the exact thing you should necessarily do, but these are some trade ideas that you guys can have a look at. All right, cool. Let's continue. So Mantra, no bounce from Mantra. It looks like it's on its way to zero. Yeah, very, very, very bad. We'll need to find out more details. I'm sure 𝗪𝗔𝗋𝗄𝗃 has probably already written something up about this. Should we have a look? Let's have a quick look at 𝗪𝗋𝗄𝗃 and see what he has to say about this. He must have said something. 𝗪𝗋𝗄𝗃. Here we go. Let's see. Okay. What is he investigating today, right? Let's see what he's investigating today. Is this something different? Let's see. Okay. He's on Hyperliquid here. Let me know in the comments. Has he posted anything about this? That's the last post that I see from him. This is not the same thing, right? This is 𝗪𝗔𝗋𝗄𝗃. No, this is different. This is different. Okay, we'll have a look at that. I'll check later. It's not really too important right now. We're more about price action. We can have a look at some of the other trade setups, see if there's any other opportunities over there. You know, I want to just go quickly showcase on some of the weekly charts. You know, if there is a macro low that is forming on some of the high time frames, you know, you have hit key support. So on 𝗠𝗏 is one, you've hit key support, right? We can have a look at Solana. I just want to outline the high time frames for you, right? Solana would theoretically be breaking back into its range, right? So there it is, breaking back into its trading range. If it can maintain and hold this, you can easily see something like Solana with Bitcoin squeezing. If Bitcoin does squeeze to like $90,000, you probably see Solana squeeze all the way up here to like 170, right? These are pretty big moves. But remember, they're counter trend moves. So you can play these moves, but they're counter trend moves. You cannot be a bag holder, right? A 30% move. You got to just pretty much take the trade, get in and get out. And this has really been the narrative across the board. If you look at that on ETH, right? You got a little bit of a swing failure pattern coming perfectly into key support over here, which is part of the reason why we were building specifically. Let's go over there. Those ETH longs, right? That's part of the reason we're building that ETH trade into that key level over there. We're looking for the swing failure, and then we're looking for the big move up. There's your ETH BTC chart, right? So I still think that ETH BTC does probably sweep this level, which it currently still leaves it in the same place as last week, about 15.18% towards the downside. Now, for those of you that want to trade, guys, there is an opportunity over here with Femex. I want to show you something cool with their platform specifically. Firstly, before I show you, remember, if you do sign up using the link in the description below, you get up to a $2,600 USDT sign up bonus, right? That's the first thing. There's no KYC here. That's the second thing, which is amazing. But the third thing, which is really, really cool, is you can actually trade most of these things straight through TradingView. So if you go underneath over here, you'll see, and you click over there, there is a bunch of brokers, right? Let's just quickly clean that up. So if you go underneath, I'll probably have to disconnect this to show you. But if you click underneath over here, you're actually able to connect your brokerage account, which will allow you to take these trades, right? So you can physically trade through the terminal. That gives you, or through TradingView, which is where you're doing all of your charting. I guess it's very, very useful for any of you that are on the super low time frames. So for example, if you're watching something like this now unfolding on, the 15-minute time frame and you're looking for that entry, you can physically take the trade there, right? There it is, trading terminal. You go through over here, you click FEMX, and essentially you connect. I've already connected another chart, so I'm not going to do it again, but a nice feature which very, very few exchanges offer. Okay. Cool. Let's do some other chart requests. Please do let me know if there's anything you want to look at. Let's see what else. What else have we got? How have the other real world assets done? Some of the other real world assets like 𝗪𝗂, we've taken some nice little relief trades on this, right? If you do go into the Discord, right? One of our coaches over there, Chris, taking a beautiful trade on 𝗪𝗂. Congrats to all of those of you who got in. Nice profits over there. And I think he also got an amazing trade on, was it on Super? On Super, here we go. Another great trade on Super, some big profits over there. So jump into whale room as well if you're not already in there. Okay, I want to see as well, while you drop your chart requests, we'll have a look. I see POPCAT, Sonic, things like that. We'll have a look at those. Just a very, very quick look over here at the open interest, in the short term favoring the bears, slightly positive open interest, relatively neutral. Let's just see if we look back over here. Okay, not too high. It's okay. It's average, not too high. Okay, we'll go to POPCAT. Let's quickly see how POPCAT looks. Some coins have already put in 200% moves, by the way, guys, since the lows. So don't get too caught up in the relief rallies. Of course, these things can squeeze way, way higher. For the most part, I would expect, even if it was a counter rally, a lot of these coins can just squeeze to the yearly open, right? So mark out the yearly open. A lot of things can squeeze up to the yearly open. That's POPCAT over there. On the weekly, we can go on the daily. Let's see on the daily. Okay, so playing out that trading range, sweeping the previous month's low, reclaiming, seems to be holding up, but you are approaching resistance. I wouldn't long this at all. If it can hold above 30 cents, then maybe. Otherwise, you're entering into resistance now. Okay, Sonic. We can have a look at Sonic. Let's see, Sonic. Okay, a little bit of a messy chart. Let me go on Phantom rather. It's trading at the same price, just for some more history and perspective over here. Look, the key level would be, if you can get a move down to fulfill some of this wick, which hasn't been properly filled yet. If you can fulfill some of this wick over here and the liquidity at about 35, 36, if Bitcoin does come down, I think that's a great zone. Otherwise, this is just literally chopping about in order to get into an area of strength. It's got so much work to do. I think first level I'll be watching is get above 60 cents. Okay, let's see WIF. How does WIF look as well? I know high time frame, it's not great, but low time frame, has anything happen? Okay, still just bleeding, right? Still bleeding over here. So get above the previous month's mid, and then you can target the previous month's high. Otherwise, this is still downtrending. Lower lows and lower highs. Nothing has changed over here. How's 𝗪𝗡 doing? Okay, 𝗪𝗡 still really bad, right? Also consolidating around those lows, lower lows and lower highs. Not looking good. Filecoin, also lower lows and lower highs. All right, these are not good plays for long-term investments or things like that, right? So needs to get above 278 on Filecoin. All right, what else? What else, guys? AVAX, let's have a look at AVAX. The altcoin sector has a lot of work to do. You've broken this downsloping trend line. On a closing basis, this is still lower lows and lower highs. So ultimately you are coming into key resistance over here, right? But you've broken the downsloping trend line, which means at the very least, maybe, just maybe, you'll see a bit of a range form on AVAX, right? Similar to some of the other coins I've already shown you have been trading within this range for quite some time. And then you need to break out of that range, hold above, deviate, and then you can look for the squeeze to the yearly open, right? So as it currently stands, that's the level to reclaim. Ondo, yeah, let's have a look at Ondo. I'm curious how Ondo's doing given this mess with Mantra. Let's go to Ondo. So I wonder if people are going to panic out of Ondo. Maybe they think the same thing's going to happen over here. It's grinding into, at least this diagonal support, but that doesn't mean too much for me. If this trend continues towards the downside, ultimately, I still expect something like, Ondo to move down to about 53, 54 cents, put in a low over there, and then continue. You're not missing anything if you're worried about altcoins, making a run for it and you're missing out on like the biggest alt season ever. It will take time, right? Even if that were to come, you would expect a big shift that needs to occur within the market. There's a lot of things that have been heavily smacked. So you need to see a bigger shift still taking place. Cardano, we can have a look at Cardano. Let's see, ADA. Okay, just bleeding out, right? So again, pump, give up all the gains. Literally, I know that this probably hurts some people to hear this, but honestly, I'd be targeting straight back down to these lows. Definitely straight back down to those lows. What is that as a percentage? This is going to be, there we go. Still, let's go all the way to the bottom, about another 50% down. All right, 50% down. How's XRP looking? We can go to XRP. Here it is. Okay, XRP, you know, it already tagged that level, so that's at least one good sign, but it is putting lower lows and lower highs, right? So, yeah, big zone over here, big rejective zone. Actually kind of looks similar to Bitcoin in that sense. At least it got back above this key level over here. Let's see on some of the lower time frames. All right, I mean, I think if this can hold the yearly open, you can probably still squeeze a bit of a trade up to the previous month's mid, right? So if this can hold the yearly open like that and it gains acceptance there, you could probably trade this to the previous month's mid, and then that's where you're going to hit that trend line that's been governing the macro lower highs, and you probably want to exit that trade. All right. But again, guys, be very, very, very careful with the long trades that are out there. And again, if you want to be quick in and quick out, you know, Pinex, remember, or Femex, excuse me, remember you can connect that to your trading view and trade straight through there. All right, Prime, we can have a look at that. I would imagine the gaming tokens have just not had any sort of a move. We saw Super at a small relief rally, but yeah, look at that. Pretty much new lows. It's not good. You would need to at least see price reclaiming some of these key levels. Maybe you're lucky enough to consider this order deviation. I would say the earliest would be, you know, if you get above 339. If you're super aggressive as a trader, you know, 316, but otherwise I'd rather stick with that, like 339. 339 is the level to get above. All right. Cool, guys. I hope everyone is doing okay and safe out there. Again, I really see the possibility for a bit of a squeeze this week, but I think patience will pay, right? You can save yourself a lot by being patient, right? Because it may have felt that way on a lot of these, right? Like, for example, when you came into this key level over here, it may have felt like the whole market's going to break out, right? Because at one point, this candle, you know, would have been a full green candle. And that's what it would have looked like at that point in time. And then you just waited for the day to close and pretty much straight rejection, closed all the way at the bottom over there. But I could easily see price holding this level, you know, some sort of a squeeze like that up into this 90s. And then we'll see what happens from there. So that's essentially the plan. I think, you know, to summarize it, how can we summarize this plan? To summarize it, the main points, stock market can put in another 5-6% rally, pulling into that death cross. Look out for the kiss of death in the coming weeks. If you do get the kiss of death and you can't reclaim 5,800, we may be in for a recession, short bear market, maybe even a long bear market. I don't know, but it would be some sort of a bear market. You know, wait for Bitcoin to reclaim back above $88,000. That's essentially the equivalent of avoiding the kiss of death that the stock market's about to witness. And then, yeah, we can take it from there. So patience will pay, right? That's it from me, folks. I'll see you all on the next one. I hope you have a stellar day, and we'll catch you tomorrow. Cheers for now.